As we look towards the horizon of 2026, a single powerful question echoes through the minds of investors, innovators, everyday people alike. Are non-fungible tokens, or NFTs, the next colossal investment opportunity? A digital goldmine waiting to be discovered by those bold enough to venture in? Or are they merely a speculative bubble, a house of cards teetering on the edge of a dramatic collapse? This is not just a conversation about technology or finance. It's a discussion about the very nature of value ownership art in our increasingly digital world. The answer is far from simple, and the stakes are higher than ever as mainstream adoption continues to blur the lines between physical realms and virtual realms. The journey of NFTs has been a roller coaster of exhilarating highs and stomach-churning lows. We've witnessed digital art pieces selling for millions, creating overnight millionaires and capturing the world's imagination. We have also seen the market correct itself, values plummeting, prompting many to question the long-term viability of these assets. This volatility has created a deep divide in opinion. Evangelists who believe we are only at the very beginning of a revolution that will reshape industries. Skeptics who see a fleeting trend fueled by hype and a lack of fundamental value. The truth likely lies somewhere in between these two extremes. This essay aims to navigate this complex landscape. Our goal is not to give a definitive yes or no on investing. Instead, we want to equip you with knowledge and critical thinking tools to decide. We'll peel back hype and reveal the core mechanics of NFTs. We'll explore principles that could give them lasting value, and we'll expose significant risks every potential investor must know. By the end, you'll understand NFTs beyond headlines and jargon. We'll present a balanced view, potential growth, and the very real possibility of loss. We'll examine the current market, drivers of value, and expert predictions up to 2026. This guide is your compass in the wild world of digital assets, helping you decide if this path suits your investment journey. To truly grasp the potential future of NFTs, we must first establish a solid foundation of understanding. This essay will begin by breaking down the current landscape of the NFT ecosystem as it stands today. We'll move beyond the initial wave of digital art and collectibles to explore the diverse and expanding sectors where these tokens are making a significant impact. Blockchain gaming, where players truly own their in-game items. Virtual real estate in metaverses. The applications are growing more sophisticated and integrated into our digital lives. We'll show you how these tokens are more than just pictures. Our journey will then take us into the heart of what makes NFTs so compelling to investors. We will demystify the core fundamentals that underpin their potential value. This includes the crucial concept of digital scarcity, one-of-a-kind or limited runs, and provenance, the transparent, unchangeable history of ownership on-chain. We'll explain why knowing an asset's entire life cycle, from creation to its current owner, is a game-changer for authenticity and trust. These are the building blocks proponents argue will support long-term value creation. However, no honest discussion about investment is complete without examining risks. We'll cover the challenges and potential pitfalls of the NFT territory. Extreme market volatility, lack of a clear, unified regulatory framework, technological risks, smart contract vulnerabilities, securing your digital assets. We'll give a 360-degree view of potential dangers. Finally, we'll equip you with critical questions to consider. This isn't about us telling you what to think. It's about empowering you to think like a seasoned investor. What is the real utility of this NFT beyond speculation? Who is the team behind the project, and what is their track record? What does the community surrounding the project look like? By asking these tough questions, you can separate promising projects with long-term potential from fleeting fads. Our goal is to prepare you to face the 2026 NFT market not with fear or blind optimism, but with confidence and clarity. The NFT market of today is a far cry from the initial frenzy that first captured global headlines in the early 2000s and 2020s. While digital art remains a prominent pillar of the ecosystem, the landscape has diversified into a sprawling metropolis of innovation. We've moved far beyond simple JPEG files. Now, NFTs represent ownership across many sectors, each with its own community and value proposition. Think of it less as a single market and more as a collection of interconnected industries. All of them leverage the same underlying technology to redefine digital ownership. This evolution matters as we approach 2026. One explosive growth area: blockchain gaming. Players can truly own items they earn or buy in-game. Powerful swords, rare character skins, unique vehicles. These assets are NFTs, meaning they can be traded, sold, or even used in other compatible games. That creates a player-owned economy. It's a fundamental shift from traditional gaming, where purchases are locked inside one game's ecosystem and controlled by the developer. The promise of real-world value from gaming time has drawn millions of players and significant investment into next-gen virtual worlds. Alongside gaming, virtual real estate has emerged as a fascinating and highly speculative frontier. Platforms like Decentraland and The Sandbox allow users to buy, sell, and develop parcels of land represented as NFTs. These virtual worlds are becoming social hubs, concert venues, and digital storefronts for major brands. Owners can build experiences, host events, or lease their land to others, creating new digital economies from the ground up. The sale of a plot of virtual land for hundreds of thousands of dollars might sound absurd, but for believers in the metaverse, it's an early stake in the digital real estate of the future, akin to buying land in a burgeoning city. The world of collectibles and music has also been transformed. Digital collectible projects, often released as a series of thousands of unique characters with varying traits of rarity, have created vibrant communities of traders and enthusiasts. These function like the digital equivalent of trading cards, where scarcity, aesthetics, and community sentiment all drive value. In the music industry, artists are using NFTs to sell limited edition albums, offer royalty shares, provide fans with exclusive access to unreleased content, and private events. This technology allows creators to connect directly with their audience, bypassing traditional intermediaries and creating new, more intimate relationships with their supporters. To navigate the NFT landscape, it's essential to understand the basic machinery that powers it. At the core of this ecosystem are three key components: the marketplaces, the digital wallets, and the blockchains. Think of a blockchain as the public ledger, a decentralized and unchangeable record book that tracks every single transaction. Blockchains like Ethereum, Solana, and Polygon. Each transaction is recorded permanently, providing that all-important proof of ownership and a transparent history or provenance for every single asset. This decentralized trust is what makes the whole system work without a central authority. Next are the NFT marketplaces, which act as the digital storefronts and auction houses of this new economy. Platforms like OpenSea, Magic Eden, and Rarible. They are galleries where you can browse millions of NFTs, from digital art to gaming items. These platforms allow creators to mint their work, the process of turning a digital file into a unique token on the blockchain. For buyers, they provide a place to discover new projects, track sales data, and securely purchase assets. The marketplace is the user-friendly interface that connects everyday people to the complex technology of the blockchain. Just to be clear. Of course, to interact with these marketplaces, you need a digital wallet. A crypto wallet, such as MetaMask or Phantom, is your personal key to the decentralized web. It doesn't store the NFTs themselves, those live on the blockchain, but it holds the private keys that prove you are the owner of those assets. Your wallet is your digital identity, your bank account, and your keychain all rolled into one. It's what you use to sign transactions, confirming that you approve a purchase or a sale. Security of this wallet is paramount, as losing access to your keys means losing access to your valuable digital assets forever. So really guard them. The interplay between these three elements creates a dynamic and fluid market. A creator mints an NFT on a specific blockchain. It is then listed for sale on a marketplace. A buyer, using their digital wallet, connects to the marketplace and purchases the NFT. The transaction is verified by the network of computers running the blockchain and is permanently recorded. The ownership is transferred from the creator's wallet to the buyer's. This entire process, while complex under the hood, has become increasingly streamlined, allowing for a global 24/7 market where digital assets can be exchanged with a level of transparency and security that was previously impossible. The population of the NFT world is as diverse as the assets themselves. From generative art to profile picture collections to virtual land and in-game items. Understanding the different types of buyers and their motivations is key to deciphering market trends and predicting future movements. One of the most foundational groups is the collectors. These individuals are often driven by a genuine passion for the art, the artist, or the project's concept. They are the digital equivalent of fine art collectors or comic book enthusiasts, seeking to build a curated collection of pieces they appreciate. For them, the potential financial gain is often secondary to the joy of ownership and the connection they feel to the work and its community. In stark contrast to the collectors are the speculators, or flippers. This group is primarily motivated by short-term profit. They treat NFTs like stocks, buying into projects they believe are undervalued or have significant hype with the intention of selling them quickly for a higher price. Speculators are crucial for providing liquidity to the market, but their rapid buying and selling also contribute significantly to the market's notorious volatility. They are constantly analyzing market data, tracking social media sentiment, and trying to get in on the next big thing before the crowd, often moving large sums of money in and out of projects within days or even hours. A rapidly growing demographic is the gamers. Blockchain gaming allows players to truly own their in-game assets. This has created a new class of NFT buyer who is not just an investor, but an active user. They purchase NFTs to gain a competitive advantage in a game, to customize their avatar, or to access exclusive in-game content. Their purchasing decisions are driven by utility within the game's ecosystem. A powerful sword NFT is valuable to them because it helps them defeat stronger enemies, not just because they hope its price will go up. This user base provides a more stable and utility-driven demand for certain types of NFTs. Finally, we are seeing a significant influx of established brands and institutional players into the space. Major corporations from fashion, sports, and entertainment are launching their own NFT collections to engage with their customers in new ways and build brand loyalty. Companies like Nike, Adidas, and Time magazine have all entered the market using NFTs as digital merchandise, loyalty passes, or a way to connect their physical products to a digital identity. This corporate adoption lends a sense of legitimacy to the space and introduces NFTs to a massive mainstream audience that might otherwise have never been exposed to the technology, further fueling its growth. So, as we stand at this vantage point, looking out toward the complex landscape of 2026, we return to our original question. Are NFTs an investment goldmine or a risky gamble? The truth is, both. The potential to redefine ownership, build vibrant communities, and unlock new forms of utility is real. In sectors like gaming, ticketing, and brand loyalty, this extends far beyond simple speculation. For projects that deliver on their promises and foster genuine engagement, the future looks bright, presenting opportunities that feel like a digital goldmine. But risks shadow that potential. Extreme market volatility, lack of regulatory clarity, fraud, and technical failures are ever-present dangers. For every success story, countless projects will fade into obscurity, leaving behind worthless tokens. NFTs are not a get-rich-quick scheme. They're an investment in a nascent, high-risk technology sector. This demands caution, extensive research, and a strong stomach for turbulence. Ignoring the gamble is as foolish as ignoring the potential gold. The path to success lies in balanced, critical analysis. Before you even consider investing in an NFT project, you must run it through a personal checklist. First and foremost, understand the utility. Ask yourself, what does this NFT actually do? Does it grant me access, give me in-game advantages, provide me with voting rights? If you cannot clearly articulate the token's purpose beyond "the art looks cool" or "the price might go up," you should be extremely cautious. Utility is the anchor that can help an asset weather the storms of market volatility. Next, check the provenance and the team. Who is behind this project? Do they have a public, verifiable track record of success? Or are they anonymous figures hiding behind cartoon avatars? Use the blockchain to your advantage. Look at the contract and check the distribution of the tokens. A project created by a reputable artist or a doxed team with relevant experience is fundamentally less risky. You must also evaluate the project's liquidity. Look at the trading volume on marketplaces. If very few tokens are trading hands, it might be very difficult to sell your asset later, even if its theoretical value increases. Finally, and most importantly, measure your personal risk tolerance honestly. Never ever invest more money than you are willing to lose completely. The allure of massive returns can be intoxicating, but the risk of losing your entire investment is very real. Avoid the fear of missing out at all costs. There will always be another project and another opportunity. Take your time, do your own research, follow trusted, level-headed experts in the space, not just hype-driven influencers. Your financial well-being is far more important than chasing the next potential moonshot. Your portfolio should reflect your own goals and comfort level. We hope this exploration has provided you with clarity and the tools to approach the NFT market with confidence. The conversation is constantly evolving, and the best thing you can do is stay informed. If you found this guide helpful, please consider subscribing for more deep dives into the future of digital assets. And now we want to hear from you. What are your predictions for NFTs in 2026? Do you see them as the future of ownership or a passing fad? Share your thoughts and questions in the comments below. Watch the rise and fall of NFTs. Link in the description.